Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is December 7th. Today we are going to take a look at CNHI Industrial. This is out of the industrial sector. Let's jump right in and take a look. If you want to know more about this company, check them out at www.cnhindustrial.com. That's www.cnhindustrial.com. That is their homepage where I pulled this information from. CNH Industrial is a world-class equipment and services company that sustainably advances the noble work of agriculture and construction workers. The company provides the strategic direction, R&D capabilities, and investments that enable the success of its core brands. And its brands Case, New Holland Construction, Case Construction, they also have their hands in the financials where they go out and they finance the purchase of these particular products. And that is what they do. They are a supplier of tractors, construction equipment to farmers, to construction companies and construction workers, similar to a John Deere or a CAT company, very similar company. Some of you may be familiar with New Holland or Case. Again, very familiar to a John Deere or CAT. CAT is another one in a similar field here. So CNHindustrial.com. Check them out if you want to know more about them. The reason we are taking a look at them, down 0.36% on the day. CNH Industrial, ticker CNHI, closed out the day at $10.92. 52-week range as low as $9.77, as high as $17.98. They are definitely closer to their 52-week low than their 52-week high. Average volume of 10.8 million. Today's was 8 million. Pretty much a sell-off, even though there was a lot of volatility throughout the day. Sell-off from start to finish. Not a big sell-off, but a sell-off nonetheless. Only down of 4 cents here, but they're under $15 stock as well. So 4 cents for them, that's a pretty big deal. Looks like they are continuing to drop in the after hours as well. Market cap of market cap of 14.314 billion. A beta of 1.62, so you can see that volatility throughout the day. So it's not just today that they're volatile. They are much more volatile than the overall market, almost twice as volatile. Price to earnings ratio, PE here is sitting at $6.31 per share. Earnings per share, EPS is sitting at $1.73 per share. Earnings date, they do not have it listed. Forward dividend is 40 cents. Now, this is an annual payer, one time a year. That is one of the only things I don't like about this company. They only are going to pay you out one time a year. And the reason I don't like that is because it doesn't lend itself to a lot of help in that snowball, that dividend appreciation over time, right? If you're getting dividends 4 times a year, even 2 times a year, you're going to get dividends on top of your previous dividends. In this case, you're only going to get those dividends one time a year. Nice starting dividend yield, though, of 3.62%. Ex-dividend date, April 24th, and they pay out in May. We'll see that here, May. So if you were to buy them now, you would be in line for the next dividend. You would just be waiting until May for the payout and April for the ex-dividend date. 1-year target estimate, at least according to Yahoo Finance, is $15.90. So they do see some upside in the stock price on this one, right? About 50% or so in upside appreciation they see on this one. Let's jump into statistics. I like to look at dividend yield theory. To do that, you'd click on this. If you were to go to Yahoo Finance, you click on statistics, you go down to dividends and splits. You look at the 5-year dividend yield average of 1.93%. You compare it to its current 3.62. Same thing over here, 3.62. And since it is higher and significantly higher, this one is a lot higher than their 5-year average, that speaks to some undervaluation. PE is very low too. If you were to compare this price to earnings to, like I said, John Deere or CAT, you would see that this is about half of what theirs is. So this one might really be presenting a lot of value here right now. But again, I do not like that it only pays out once a year. We'll see that here in a little bit. And they do have a very low payout ratio as well, 23.15%. So that gives them a lot of runway to increase this already healthy dividend yield of 3.62%. Now, I like to get into the financials, and you should too. If you are a dividend growth investor and you are picking individual stocks, you should be getting into the fundamentals of a company, looking at the balance sheet, looking at the income statement, looking at their debt to equity ratios. Is their revenue growing? Are they paying down debt? What do their margins look like? Are their margins growing over time? All that is great information that you will find under the financials of a company. And you also want to be looking at their free cash flow. We want growing free cash flow because dividends are paid out of free cash flow. Debt is paid down out of free cash flow. Reinvestments into the company, acquisitions are made with free cash flow. Free cash flow is very important. For our case, again, with growing free cash flow typically comes growing dividends. So we went back to 2019. We see 1.8 billion here. Jump up in 2020, big jump up to 5.5 billion. Bit of a drop in 2021 to 4 billion. And this, just like Cat and John Deere, is a cyclical company. So you are going to see these ups and downs over time. 2022, big drop down, only 557 million, but they also started repurchasing their own shares. So you can see that big jump up in repurchase shares. I'd have to do the math, but that may account for some of this drop down, or they may just be a drop down. So far in 2023, it looks like negative free cash flow, but they're also increasing that share count. So we'll have to see how they do for the rest of the year. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick out any sources that you like. Just make sure that you're picking out more than one so you can back check the information you are getting is not only accurate, but that is up to date. Some of these sites out there don't update information regularly, so it might be a month or two behind, and that's why I like to look at different sources, making sure, again, my information is accurate as well as up to date. And sometimes different sources present different information. This one presents the same information, additional information like this stock forecast, and just in a different manner. They also go back further than Yahoo Finance does as well, which is one of the things I like about them. And when I say further, they go back from further in time. I can see the free cash flow further in time. I can see their revenue, their debt, all the information on the company further back in time. But for this one, we are going to look at their estimates. According to the 12 stock analysts that have taken a look at this on stockanalysis.com, they have a low estimate of $13. It currently sits lower than their lowest estimate, so that would be a 19.1% increase if it came back up to their lowest estimate. Average estimate of $18.46. That would be a 69.13% increase. And that's also pretty much in line with what we saw with the Yahoo Finance estimates as well. I think a little bit higher than theirs. And a high estimate of $31 per share, which would be a 184.01% increase in the stock price. All the while, you could collect that 3.6% dividend yield. Now, I like to get into the statistics here, look at return on equity and return on invested capital. We are going to see that tells us what we're looking for here is how well a company does reinvesting its capital back into itself, whether that's buying shares, whether that's making acquisitions, updating equipment to make more tractors, buying new plants, that sort of thing. And I like 10% or better on return on equity and return on invested capital. In this case, its return on equity is 31.6%, smoking high, very nice return on equity, and return on invested capital just slightly lower than the 10% I like at 9.42%, not egregiously so I could live with that. Now, I also like to look at EPS growth forecasts. I like 5% or better. This one's showing 3.91, so it's a little lower than I like on this, and revenue growth forecasted at 3.48%. Now, you should also be looking at dividend growth. We want growing dividends. Like I said, low payout ratio, very, very high dividend growth on this. So even though they only pay out once a year, they are increasing that dividend over time aggressively. So I really like that growth. I don't know that it's going to continue, every year into the future, but right now they have very, very high dividend growth. Now, looking at the dividend, I did go back to 2014. It looked like this is where they actually started paying out that dividend. You can see they are a bit up and down. Hopefully they are starting to, looks like they, here, let's just go back to 2014. 23 cents in 2014, down to 18 cents in 2015, down to 12 cents in 16, down to 10 cents in 17, started growing again in 2018 to 14 cents, 2019 to 17 cents, 2020 to 18 cents, down again in 2021 to 13 cents, big jump up in 2022 to 30 cents, and continuing that growth again in 2023. So I don't like that they pay once a year. I don't like that they are sporadic. They're up, they're down. They're probably adjusting this dividend with how their company is doing. With such a low payout ratio, it'd be nice if they made it a little more steady and just had a nice steady growth up. But overall, for the last, 3 years, they do have growing dividends, and it is growing fast. But I do not like its one. It's interesting. I don't know that it is more appealing than, let's say a Cat or a John Deere, but it's in that wheelhouse. So I thought we'd take a look at it as another option for you out there. And if you are a dividend growth investor tuning in the channel, thank you for watching. Don't forget to hit the subscribe button. Hit that subscribe button. Smash that subscribe button down below. Don't forget to hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. I do videos like this Monday through Thursday where I look at a company and look at its fundamentals here, a few metrics and criteria that I like. You pick any ones that you want, and I share with you what I think about the company and what the metrics are. I also do a portfolio update every Sunday. So again, if you are a dividend growth investor, hit that subscribe button, join us on this journey to financial freedom, and hit that notification bell so you're notified whenever we post any content. Drop a comment, let me know what you think of the company, and share with anyone you think that might find value in this one. And this is the vested interest stock screener. This is how I set up the videos. It's also how I look at companies on a high level to see if I am interested in buying them. You create your own criteria. You can use this if you want. Go ahead and tweak it how you like, add to it, take away from it. Don't blindly just copy it. It is one that I've chosen. These are the metrics that I like. You may like some other ones. That's all up to personal investing opinions. And that is it for this one. Really appreciate you stopping by. Let me know what you think of CNH Industrial, ticker CNHI. Really love to hear from you. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Again, subscribe to the channel. Hit that subscribe button down there. It really helps out the channel. Dropping a comment does as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. And tune back in on Sunday. We'll have our portfolio update video out on Sunday morning. We'll see you in that one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount and come to losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel by a certified financial advisor.